Hi guys, welcome to the honeystocks.com weekend analysis for the 20th of July 2019. Now, if this is your first time here, I have a heap of stocks that I feel like should be on your radar for next week. Everything is backed up by technical analysis, but the first thing I need to say to everybody is please pause the video, give that a quick read, make sure you're comfortable with it. If you have absolutely zero understanding of technical analysis, if you don't know what you're doing with the market, if you are uneducated, absolutely do not act on any of these charts whatsoever. If you don't have I suppose a good idea of when to enter and when to stand aside, then absolutely do not act upon any of these trades, because there's a lot of ideas here. I think I have roughly around 20 charts this week. So hopefully you find a lot of use for it. Now, just to give myself a little bit of credibility, I'm Sam, and I'm currently studying for my CMT market technician designation, which is a huge deal. You could probably just Google it and figure out what that is. But if you do like the video, please subscribe to our YouTube channel, give it a thumbs up. It all helps to get the message out there that trading doesn't need to be complex, to get away from all the get rich quick schemes that everybody seems to be promoting. And rather than ramble on, I'll just get started with the charts, which is exactly why you've tuned in. So first up, we've got STNE. Now, obviously, tech company, and it's previously at the start of the year it had a really good move to the upside. Since then, not so good, but it is now showing signs of strength. Now, this is a stock that I currently hold a position in. It's performing incredibly well. Many of my guys are also in the position at the moment as well. But it does look like we are breaking out of a favourable chart pattern there. So STNE might be one to give some consideration to. There is potentially a little bit of resistance just up ahead, but absolutely it's a stock that I feel like should be on your radar. Now, MDT healthcare stock, now it's actually underperformed the S&P 500 this year, but it's not a massive concern to me because I'm looking at the recent trend that it's made. We can see that previously it's demonstrated strength in the past. We know that with stocks that have demonstrated strength in the past, that they're more likely to demonstrate strength in the future. And certainly this is what we're seeing at the moment. We've just broken out above $100, which is not a bearish move by any stretch of the imagination. So certainly I think MDT is a stock that should be on everybody's radar also. Facebook. Now, absolutely, this is a stock, and I'm sure many of you understand, one of my guys from his $7,000 option contract turned that into $400,000 in the back of this move, which was just insane. But since then, we've been consolidating a little bit. It's just that we've had a little bit of a breakout. Looks like we're getting a bit of a retest. I do feel like there's a potential 10% upside here on Facebook. I think you need to work out what the risk to reward proposition is and so forth. Obviously, a big performer this year, 53% move to the upside. So yeah, I think Facebook is something that you can consider. Boeing, lots of controversy this week with Boeing. Obviously, huge fine. Now, I see it bandied about social media. I've had lots of questions on it, lots of emails on Boeing. What am I seeing? And the simple thing is that there's no point in trying to second guess what is likely to happen on the back of a news event. All you can really do is go with what price tells you. Price is the absolute number one technical indicator, which is lost on absolutely everybody. Now, again, it's underperformed the S&P 500 this year, but we are now showing signs of strength. I think we're breaking out of a triangle pattern, and certainly, if you are bullish on Boeing, if you like the fundamentals of the company and so forth, whatever it is that you're weighing up to justify taking a position, price is starting to move, so I feel like that should be a consideration. Next up, we've got Zillow Group. Now, I highlighted this one a few weeks ago, and we are absolutely in a bullish uptrend at the moment. It's moving along nicely. We've met a little bit of resistance, a logical area of resistance. So I feel like if you were to set an alert for $51, I think that would represent a decent entry into the market. Certainly bullish above this trend line. Goldman Sachs, obviously 30% up this year, steady performer. If you missed this breakout here, we've just been had positive earnings. I think we can all agree upon with Goldman Sachs. So for those of you that are maybe looking to have a little bit of exposure to financials, I think Goldman Sachs makes a lot of sense. There's obviously a good upside proposition there, provided obviously the market plays ball. I think that's the caveat to absolutely everything that I'm talking about here. I think the overall market has to play ball with us. It's not enough to just keep an eye on the individual stocks, because quite often it's not about the individual stock. We can have an incredible stock that still tanks on the back of a declining market. So, just be aware of what's going on. MDB. Now, we had a failed breakdown during the week here. Now, this was actually a catalyst that removed quite a few of my guys from profitable trades, which is fine. But almost immediately, there was a case to be made for buying back in, which many of them done. And this is moving beautifully. 96% this year. Massive performer. So if MDB is not on your radar, I think MDB probably should be on your radar. Take-Two Interactive. Now, it's been a while since I've been bullish on gaming stocks. I think underperformed the market this year, 14%. However, since February, it's obviously started to move. So we are in a bit of a bullish uptrend here, which is obviously great. I think if you were to set an alert for maybe around $120, that might, be worth considering, for the potential for the next leg up. Next up, we've got Disney. Again, lots of messages about this one, just on the back of, I suppose, Netflix during the week there. Disney is still bullish at the moment for me, anyway. We're obviously moving sideways at the moment. We've not really got the continuation that this breakout, I think many of us were expecting. We're still kind of moving sideways at the moment, which is absolutely fine. But, absolutely, this is obviously the weekly chart for Disney. I think provided we stay above this level, then I think we can still be bullish Disney. I don't think there's anything that is saying to me that you need to perhaps exit positions and so forth. Are there other stocks that are moving a bit more quickly? Absolutely. But, if you're a believer in Disney and you like what you're seeing, I think price is backing up, staying in the position at the moment. Zscaler, again, this is a stock, incredible move, 116% this year. Many of my guys have done ridiculously well on Zscaler, which is lovely. But those of you that are maybe looking to move in on a new position, I think we can be bullish above $80. I think the point that I would be saying, look, let's revisit and let's reconsider that thesis would be on a break below this trend line, a break below $80. But absolutely at the moment, it just looks like we're getting a bit of consolidation, and hopefully it's building a bit of a base for the next leg higher. Now, I've still got maybe another 7 or 8 charts to quickly walk through, but please, if you do like the video, if it is resonating with you in some way, feel free, again, to subscribe to our YouTube channel, give a thumbs up. And I think the other thing to say is, if you are somebody that does struggle a little bit with your trading, Stick around for a couple of minutes at the end. There may be something that we can do to help you out in some way. But yeah, let's just get on with the rest of the charts. So next up we have Okta. Again, tech company, beautiful move this year. Most of you that follow me closely already know that my guy's got alerts in here and in here. And Okta is obviously flying. It's moving beautifully. Again, those of you that are maybe looking for new entries into the market, I think provided we can stay above this level, I think again I'd reconsider my thesis if this trend line was broken. But absolutely, there's nothing bearish at the moment with Okta. The only thing that I do see commented quite a lot is, especially with a lot of these, cloud-based companies in Silicon Valley, a lot of them have obviously massively outperformed the market this year. Now, I think when you have an understanding of sector rotation, which is absolutely very, very real, it stands to reason there's going to be a huge decline in these cloud stocks at some point. I think we can certainly look to the past to get an idea of, the hype behind semiconductors, for example, and what happened to, poor old Nvidia, Lam Research. Now, those companies are absolutely starting to recover, but just be aware that some of these cloud-based tech companies, they don't keep going forever, but enjoy them while it lasts. Next up, we've got Cisco. Again, another tech company, and it's obviously on a bullish uptrend at the moment. It's been moving sideways for the last couple of months, which is fine, but it does look like we're on the cusp of potentially breaking out here. So I think Cisco Systems is one to potentially look at. AYX. Sorry, excuse me. Again, we're all about strengthen market at honeystocks.com. And we've been on a huge bullish move to the upside again. Many of my guys are currently in this. If you're looking for another entry, I think maybe above 120 might represent an optimal entry. Again, I don't see anything bearish with AYX at the moment. But yeah, it's certainly showing strength. Now, Universal Display Corp. Now, those of you again that follow me closely will know that this has been highlighted a few times now. Ridiculous move to the upside over the last 6 months, 122% year to date. Again, we're close to breaking out to all-time highs. It's never a bad thing when we break out into new highs. The only thing you do need to watch for is obviously the failed moves, which there's a very specific way to manage a fade, and certainly OLED I think is currently moving. I think price really speaks for itself there. New York Times, again, we've got resistance at a logical area of resistance. I think when we look at the daily chart, looks like we've had a breakout, little bit of a retest, hopefully a move to the upside. I think when we look at the technical indicators that are not obviously shown by this chart, there's many indicators at the moment that are showing bullish signs on the New York Times, and that's maybe something else to just touch on as well. Please understand that with the charts that I'm presenting to you at the moment, there's a lot that's going on in the background with these charts. I just have a philosophy of, I suppose you would call it chart art, where I don't like to clutter things up. I like to just try and simplify the charting so that it's easy to understand. But there are some indicators going on in the background here that are not being presented. But absolutely, New York Times, I think we can be bullish above this level. Yeti Holdings, it's obviously on a bullish uptrend. I think since its IPO, it had a huge move, lots of hype. Obviously, bit of a decline, pretty standard, recent IPO and so forth. But again, we're moving on a nice linear uptrend, and I think we can be bullish above this $31 level. I don't think there's anything at the moment that's saying to me that the price is likely to fall off a cliff anytime soon. Massive performer again this year. So yeah, I think Yeti is something to look at. Coupa software again, nice bullish uptrend, which is what we're all about. Certainly an alert was sent out to my guys at $100 here, and since it's just been flying up, nearly 50%. And for those of you that are looking for the next entry into Coupa software, I think above $150, if it can clear that barrier, then again, Coupa software makes a lot of sense. A lot of you are asking me about Amazon heading into earnings. Now, that's something else to touch on, is with earnings, you need to have a very clear rule set in place. Now, I've got a mega popular YouTube video on the subject, which is obviously, it's from my blog. I actually did the video just a couple of weeks ago, but the blog itself is mega popular, and it really just gives you an idea of the rules that you can implement come earnings season. It makes a lot of sense. But heading into earnings, Amazon has broken out. It looks like we're getting a bit of retest, and then hopefully a move to the upside. But I think it's obviously going to be dependent upon what happens come earnings, what happens next with Amazon. I think if you get a break to the downside, I think you're probably wanting to just say, if you move into this level, let's not take any chances. Let's not be holding on to our capital with hope. I think Amazon's obviously a massive company. It's an incredible company. I know many of you out there will be, holding this and just refuse to sell, and that's absolutely valid as well. But from a technical perspective, it just makes a lot of sense to, be bullish above this level and, cautious below it, shall we say. Okay, probably to the number one stock of the week. My email inbox nearly exploded after earnings. I think the chart itself, when you look left on Netflix, it's not massively appealing recently. Okay, no, absolutely in this move, beautiful. Since then, no, not so good. Now, the stock is obviously trading in a bit of a range here. We're now testing the bottom of this range. I think if you get a break below this range, I think you can certainly look for it to test this level here. And if it moves below that level, then you're probably looking at it testing, maybe around 240. But, it could absolutely rebound from here and move back to the upside. But I think for me at the moment, Netflix just doesn't appeal, especially when you compare it with the other stocks that I've talked about, the other areas of the market that are actually moving. I don't like to really gamble. I like to take educated positions in the market, manage risk. So certainly Netflix at the moment is probably a no-go for me. And yeah, we've also got the gold miners. Now this is one highlighted down at 35 to my guys. It's obviously had a huge move this week, which I've been personally bullish on gold for the last 4 weeks. You can go and watch the YouTube video on gold and maybe check out my website. But it's moving now. There's a tremendous amount of upside potential with this ETF. So, if you are looking to have exposure to precious metals, then you can certainly look to the ETFs. So, excuse me. I think you can look towards the ETFs. I think there's a lot of profit to be had there, especially if you're looking at a time horizon over, at least the next 3 to 6 months. I don't see any reason to be bearish on gold. Silver has obviously broken out massively this week also. So I think it just makes a lot of sense to maybe have a look at these areas, try and identify the strength within these areas, which is what I do. That's what I'm well known for. So, absolutely, if you are looking to have exposure to gold, you can look to the ETFs. I think, like I said, it just makes a lot of sense. And I think when you go back over the charts that I've obviously presented to you today, a lot of you are probably thinking, what the hell was that? I mean, like I said before, you can probably get an idea that I like to keep things simple with my charting. I don't like to overcomplicate it. And as I said, I'm Sam, and I'm currently registered with the CMT Association and studying towards my chartered status, which is obviously, as I said before, it's a big deal. But I also run honeystocks.com trading school, but I have a very specific style of trading. I don't teach get rich quick schemes. I don't teach people to follow me and just my charts. I teach you to perhaps stand on your own 2 feet. And obviously, that is what will ultimately bring you success. It's not about following other people and hunting around social media for lots of free content. You obviously have to be able to stand on your own 2 feet. And I understand that the path of a trader is quite often a difficult one. It's a lonely one at times. But I think with what I do at honeystocks.com, there's a very specific type of person that I can help. And I think, if I was to break it down for you like I have here, I think if you've got a career, if you are maybe trying to get away from day trading and want better consistency, if you want to be able to learn and not just follow, if you want to learn a style that has minimal stress, maybe if you want to learn with a successful group of traders, and if you want to enjoy life, I think those are the types of people that I can help. And I think if you were to ask yourself, what if you were able to build a trading plan and maybe had a rule set for the rest of your life, how would that impact your trading? And I think the unique thing about what I do is I, unlike every other get rich quick scheme or every other trading air quotes educator out there, I actually like to publish every single trade idea that I post to my client group for complete and open transparency. So you can go and have a look at my website and you can see exactly what charts I'm posting to my guys and when I post them and how they've performed. And you can make a decision from there whether you feel like it's a good fit for you. What you will probably realize there is that I'm not shouting out 10 trade ideas a day. I've very much got an emphasis on quality over quantity, which is what I would consider my edge. So that's the charts that I've posted for 2019. The charts for 2018, again, are all published on my website. So, feel free to go and check that out. And if you feel like that's a style that you would like to be aligned with, then you can absolutely get in touch with us, because I know that the average journey for a trader can be a couple of years, and during that time, generally you're going to be learning from losses, which I think most of us that have gone on to do good things, we understand that that's the worst thing about trading is not really having an idea of what you're doing, and that translates into education from losses and maybe learning from YouTube and also reading books. And I know that ultimately a lot of you watching this will ultimately just say that to the market, and I understand that it doesn't have to be that way. And we genuinely believe in making a difference at honeystocks.com. You can go onto our website, check out our testimonials, see exactly what it is that we do for people. So the question you can probably ask yourself is, do you want to keep doing it the old way, or maybe do you want to learn a new way? If you do want to learn a new way, very, very straightforward. You can go onto our website, just click on join. You can apply. Just choose a time. Tell me what you struggle with. That's absolutely key to it. Tell me what you struggle with, and we'll have a chat. Quite often, I will have conversations with people. I've had hundreds of conversations with traders across the world, and quite a lot of the time I can actually fix your problem on a 20, 30-minute chat. I'm not going to try and chuck anything down your throat, make you try and join up to anything that you don't want to join up to. But if you are somebody that struggles and you want to talk to somebody about maybe improving things, you can absolutely do that. I've opened up my calendar for the next 3 days. So just jump on. Again, tell me what you struggle with, choose a time. I don't bite. I'm very chill, very relaxed. And, like I said, quite often I can help you on that call. So, yeah, if you've stuck around to the end, thank you very much for watching, and maybe I'll speak to you soon. Thanks.